Can you read that, Moon Platoon? It is the taste of liberty. What's going on, guys? This is a real silver dollar, which I will be flipping at the end of this video because I promised that in the last one. How are you guys doing? I wanted to know if you guys are ready for some DD this weekend. The coming horrors awaiting shorts part 2, power to the players, as well as a hot mic with a formal Citadel's client and what they talked about Ken Griffin. Is he now running on fumes, and is the end coming? I want you guys to know that a bunch of you have already gotten my 6-figure portfolio just by asking nicely and by sending a very nice message on Instagram. Over on Joshua Lee, he said, "Watched your song, was epic. The message gave me more hope than I could have hoped for. I don't need to see your portfolio, just happy to talk through another ape." Over on Izzy, they said, "I'm sending you apes together strong for access to your portfolio. Also, your videos have been a huge help. Didn't think that would be to understand trading at all, but you've made it accessible." I want to thank both of you. They're both getting the portfolio, like it or not. But if you guys haven't yet, watch that video, because at the end of this one, I'll decide with a coin flip whether or not it gets deleted. So make sure that you have already slapped this like button nice and hard, and make sure that you have commented out which like you guys are. All the way up to 1600. Too long didn't read. Recorded call with former Citadel client reveals Citadel has been underperforming and may have been cooking the books on their finances. Further evidence show that Ken Griffin was desperate to hold on to his client's funds and was ferocious towards anyone that left him. And this is going to be part of a longer burning cash DD post where they explain how Citadel is just a handful of clients that they provide them with the necessary capital to operate. So let's start with that DD really quick. We'll breeze through it just in case you haven't seen it. This is from a couple days ago. Too long didn't read. Every day, short hedge funds are burning through cash trying to keep the price suppressed. Their manipulation and algorithmic control can only go so far, as DRS is actively accelerating the speed at which short hedge funds burn through their cash. Loss of short hedge fund financial support, DRS efforts to lock the float, etc. all contribute to the immense cash burning dead end short hedge funds will face. Recommended prerequisite. Here are some 3 more DDs, due diligences. So, part 1, everything burns. This hasn't gotten talked about much, but they think the global effort to spread awareness on the criminal acts of Ken Griffin has been working, as Citadel definitely took notice in the past. 8 months ago, they published another article about how Citadel is probably freaking out on Twitter, speed running all 7 stages of grief because hashtag Ken Griffin lied was trending on Twitter. And you had plain banners flying out exposing Kenny's corruption, so they could imagine clients were getting anxious and wanting out. Well, let's see then. Prior to Citadel, advisors form ADV filed on 5/27/2021, they had a total of 19 clients. Remember that each of these 19 clients is a very wealthy individual. The money that these individuals provided is what made Citadel's margin, emphasis on made. That's because on ADV filed in May 27th, 2021 showed that they lost 2 clients and were now down to 17. All right, so they lost a few billion there, but Kenny had to make trips around the world to convince these wealthy aristocrats to stay invested. Were his efforts enough? Not exactly, because in the next one, you can see that he's now down to 16 clients. So since the January 2021 run-up, 15% of Citadel's clients have left, and who knows how many are still remaining. But they are actively withdrawing money every month. And guys, remember, this is important because we have seen Citadel bail out shorts in the past, like Melvin, for example, who just got dumped. If you guys haven't seen that video, it's on the channel. Make sure you guys have already subscribed and hit that bell button so you guys don't miss out on another announcement of when a margin call squeeze is coming. So they can imagine a lot of clients are fed up with Kenny and actively withdrawing chunks of their money every quarter, which would explain why Kenny resorted to degrading apes in an interview with Bloomberg, saying that apes are going after teachers' pensions. We covered that as well. That was pretty ridiculous. How much money has Citadel been losing? Definitely billions. They can't give an exact estimate because they don't trust their self-reported balance sheets, for as we have seen in the case of Huang, who was recently indicted by the DOJ for artificially inflating his portfolio from $1.5 billion to $35 billion. Yeah, that's an easy mistake. Yeah, sorry, just 20 times more than I thought. Oh man, just forgot to carry the 0, forgot to carry the 20. Citadel got $1.15 billion bailout from Sequoia in January this year, which should tell you everything you need to know about the current situation, especially considering that Citadel was the one bailing out Melvin Capital a year ago. Hey, I said that. That's what I said. Citadel's office went up for lease as well, so they're really scraping under the couch cushions to collect as many nickels as they can to survive a little longer until they have no cash left to keep down the mother of all short squeezes. As financial terrorist Kenneth Cordell Griffin said it best, each thing we did bought us one more day. Do note that as time goes on, short hedge fund margin decreases. This is because they continue to burn cash every week that goes by, cost to borrow, their various ways of price suppression, can kicking, increased liabilities, loss of funds from client withdrawals, etc. all cost them significant amount of money each week. Keeping the price suppressed for this long is unsustainable and constrains their options. So it's fun for us because short hedge funds give us a free 99.9999% discount on the shares that we are buying, and they have to pay for it all. For them, it's pure agony. So it's safe to say that since their margins are decreasing, the critical margin levels where they'd get margin called would consequently decrease as well. This is visibly seen on GME's chart. So there it is right here. This is from April 1st, 2022. You guys are seeing this descending levels of resistance and support for the same levels that they are able to critically short because their margins are getting way too strained. This chart is a bit obsolete since it's from March, but if we want to include the last 2 months of data, it would still follow the same pattern. In fact, March 29th, GME touched critical margin levels around $200 indicated by the chart, got halted and went straight down. The highest descending line in the area is that short hedge funds need to keep the price suppressed to avoid critical margin levels getting breached. You can see back in March last year, for example, critical margin levels would have been breached if GME broke past 350. Nowadays, it's around $200. If GME were to break around $200 and at least consolidate around the mid $200 level, margin calls would ensue. Mid $200 was the price that could afford GME to touch the past, but that was a long time ago. They have to have a lot of money. Hashtag leeway back then. I'm really just looking for a new margin call range, and Marge will call. They know that apes will be thinking about short hedge funds will never get margin called or can just refuse to respond, but if that were truly the case, IBK, our chair Petrify, wouldn't have to be so afraid back in January last year, saying that there was going to be some massive waves of bankruptcies had GME's price continue to rise, had Melvin not get bailed out by Citadel, and they had to close out their positions, not just covered. Quick note, based on the difference between closing and covering, so this is the education you guys are probably going to be thinking in your heads. Investopedia says the act of covering does not necessarily mean closing the position. To cover is to take a defensive action to lower the risk exposure. It's about exposure. Investment or portfolio of investments. Close or closing, in contrast, suggests the risk is being fully eliminated. Short hedge funds have million-dollar lawyers that use specific words for a reason. To be vigilant on their wording, so you'll never hear Melvin's people say closing their positions. Now, theoretically, they could have continued aggressively shorting and ultimately seller boxing at GameStop, but apes came along, as well as RC, DRS, and also GameStop has over $1 billion cash on hand, so it's pretty much over. But let's see part 2. Wall Street Crime Club losing support. Jonathan Farrow, an anchor on Bloomberg, said openly on TV that he didn't agree with the thought from Ken Griffin that apes are making teachers lose their pensions. They like to say, I like to stay out of it because we like to work on Monday. A few days later, Tom Keene is reported on WEF in Switzerland with a different anchor, and Jonathan Farrow isn't there. They mention he's on a different assignment. How convenient, he's off for the week. But here is the clip that Bloomberg removed every single one of Jonathan not being there. So that's a little suspicious. This video is going to take us too long, but they essentially edited him out. It could be a total coincidence until you see what Kramer has to say about Citadel. Oh, now we're getting into the actual juice of it. If you guys got to this part of the video, make sure to comment out right here about why you guys are holding, what you guys are hoping to do, and where you're from. I'm interested in learning about more what you guys are part of. How are you guys involved with this? And now let's listen to what Jim Kramer has to say about Ken Griffin.
Jim Kramer, as always, good morning, Jim. Your piece on Citadel, very interesting. How conclusive?
Citadel's absolutely in great shape.
It is, but how conclusive
I just want to make that point right up top.
Okay.
They're in great shape. As a matter of fact, I want to throw money at them viral loud.
You guys probably have seen this clip before. It is very, very much Jim Kramer feeling like he's had a little bit too much of booger sugar and talking his mouth off about how Ken Griffin and Citadel are in great shape. So you probably have seen news anchors aren't able to speak their own mind unless they want to face the repercussions. So the tide may be turning. Short hedge funds have lost their biggest advantage in the past: government complacency. In DOJ investigation of 2022, year of mother of all short squeezes, they went over why Archegos owner Kwang was indicted for fraud and market manipulation. While recently on May 24th, the DOJ came after multi-billion-dollar short hedge fund Glencore Capital and forced them to pay $1.1 billion in fines. A quick tidbit: DOJ found that Glencore also bribed judges to make lawsuits disappear. They made a DD post last year about how they talked about how judges commonly get bribed by short hedge funds, and for some reason, some people thought they were conspiracy theorists for saying so. So remember that they were announced that DOJ had been seeking information from Citadel, Element, and others. One of those others is billion-dollar SHF Sagante Capital. So recently, Bank of America, also known as Citigroup, as well as Citigroup, suspended equity trading with Sagante amid DOJ investigations. Development underscored how financial institutions are taking a closer look at practices and potential risks amid a sprawling probe by U.S. authorities into how Wall Street handles block trades. Investigators are scrutinizing whether bankers improperly tipped off investors to stock sales large enough to send prices of shares swinging, with banks including Morgan Stanley fielding requests for information from authorities. It's pretty clear now that this is more than the DOJ just trying to seek information from these short hedge funds, but possibly looking to obtain incriminating evidence to make indictments on a later date. This would probably explain why institutions may now be keeping their distance from any short hedge fund under that DOJ probe, which would be a bad look for Citadel because they're under that probe too, and anyone connected to or invested in Citadel is going to slowly be more incentivized to start keeping a distance from said short hedge fund as time goes on and DOJ collects more evidence. They'll be revisiting DOJ probe again. This is drastically different than 2008. In 2008, only one no-name banker went to jail. Here, actual short hedge fund owners are getting indicted, real billion-dollar fines being made. Short hedge funds involved in the aggressive manipulation of GME are being investigated, and the DOJ investigation launched a few days after GameStop announced their DRS numbers. The DOJ isn't messing around here, and Wall Street is slowly starting to seem much more powerless. Around January 2021, billionaires, wealthy public figures were speaking more freely about their disdain for the aggressive short attacks and market manipulation against GameStop and AMC, but that was back when it seemed like Wall Street was losing control and criminal short hedge funds were going bankrupt. They didn't. In February 2021, short hedge funds regained algorithmic control of the stock, and most of these public figures went quiet again. So you guys are now starting into, wow, this is quite an extensive DD. So we're getting right here into where the fractals of the algorithm are. So let's go through a little bit of the math to try to understand this diagram here. Locking the free float. There's two different types of floats: free float and full float. The free float is the GME outstanding shares, insider shares, or the AMC outstanding shares, and the free float is the GME outstanding shares minus insider shares, minus institutions, minus mutual funds, minus ETFs. Ape rockets to the moon gives us an excellent illustration here, third bar on the graph. So GME issued shares, or AMC issued shares in the very top, goes down into the full float. This is the technical free float definition, right? And then the insiders, who get a portion of it, so 63 million to about 13 million. And then finally the free float goes, full float goes into the free float, which is a separation of the full float by the free float here, with 34 million, and then 28 million goes to institutions, mutual funds, and ETFs. Finally, we get actual free float. From that 35 million, we get around 21 million actual, 12.5 million DRS, and then from the actual free float, we get exit for hidden shorts and public shorts here, and those all make up shares on loan. That's an impressive way of locking the free float. I mean, sure, we can lock the full float, that'd be great, but we would only needed the free float. Why is that? Because we need to prove that only fake shares are left. Every single share currently held by institutions, etc., has been recorded in the SEC Form 13F. This is verifiable ownership of shares. Insiders have verifiable ownership of shares as well. You can find this on SEC Schedule 13D or SEC Form 4. You guys have probably realized now that there has been some ridiculous changes in the sheer number of shorts here. We have about 27%, last time I checked, is now closer to 28.5% short. And look at that cost to borrow average. Just look at the cost to borrow max. It is getting up to ridiculous costs just to continue shorting, and yet the numbers continue to rise. So let's go down to the next section. Again, the DOJ investigation this year is very different than the one compared to 2008. In 2008, nothing happened. This year, Archegos owner and co-conspirators already got indicted for fraud, market manipulation, and face life sentences in prison. Remember, the DOJ launched their investigations a few days after GameStop announced DRS numbers. They could have launched the investigation any other time, but it happened to be a few days after those DRS numbers got published by GameStop. So, they'll doubt that they highly doubt they'll lock down the float before the Motherball short squeezes starts. But if we were to lock the free float, how long would it take? So they say sometime around 2023 will be when the free float gets locked, but we won't be able to make it to 2023 for a variety of reasons because it's 2022, the year of the Motherball short squeezes. So that is why we have gotten a 14-minute actually, take a deep breath of background here. Now that they've spoken with a former Citadel client, this is what they said. Transcript from Tim Ferriss' show. What about past investors say in decades past who you've given money to willingly? Does anyone come to mind? Edward says, well, I did give money to Ken Griffin Citadel from the time it started. I think it was investor number 1 after. Oh, nice work. Frank Meyer, who was the other general partner with Ken Griffin. Frank Meyer was a longtime friend of mine from the past, so that's why I've learned about it. It actually had Ken Griffin out to the house when he was about 18 or 19, when he was Kid Genius. We discussed at some length the idea of profit centers and subsidiary businesses. I handed him a box of prospectus that was hard to get on a lot of convertible securities. These things would come out when the securities were issued, and then they would no longer be findable anywhere. They were just rare books, so they handed him some rare books and his whole collection of cartons of these things. And so they had a very good ride with him, and they finally exited recently because the taxes take a big bite out of the returns that they get. It's just simpler to invest in an index fund. They end up better off than if they were to remain in Citadel. Also, it's complicated. You get all kinds of papers. I had 4 feet of paperwork when I finally boxed it all up in the end. So, now, who is Edward O. Thorp, PhD? He's an illustrious American mathematician, hedge fund manager, author, and blackjack researcher. He has a net worth of about $800 million and is the type of wealthy client of the 16 Citadel clients that they were talking about. So they found out that Edward Thorp is the Citadel's client. They then got to interview him. First question, when did you leave Citadel? Thorpe answers that he exited in 2020 before the January 2021 run-up and all of the craziness that transpired afterwards. This was important to note. They later asked him, why did you decide to leave Citadel? And tell me about the stipulations in your contract. How hard was it to withdraw your money? Dr. Thorpe's testimony is a revelation that underscores the many shady practices of Citadel. They'll be revisiting it later, but just to succinctly explain, Citadel was underperforming. The returns were bad, not nearly as bad as Citadel MSM made them out to be in public, but that was pre-2021. If Citadel's real returns were terrible pre-2021, they must have been absolutely awful this year as well as last. They've been only burning through their cash. They're trying to keep the basket stocks down. So they heard that it's extremely hard for Citadel clients to leave the hedge fund, but that process takes several years to exit. That would explain why the number of Citadel clients doesn't drop from 19 to a significantly less number like 10. Instead, it dropped in 16. They imagine the clients with several billions may have had more leeway stipulations in their contract, hence they wouldn't have been able to exit quicker. But for most clients, it wasn't going to be as easy, though they're going to be likely actively withdrawing, which is why Citadel needed to cut withdrawal limits and get money from Sequoia. Then they asked Thorpe about his history with Ken Griffin. I just rolled out until they stopped performing well. Then I got out as quickly as I could, Edward Thorpe. They really like that quote because it should be part of the whole ad. Discussion of Citadel's withdrawal practices and their penalties. I said to myself, if they're so desperate to keep your capital, it means they're probably seeing some risks that we don't know about. Uh-oh. But you guys have known it. You guys that have been subscribed and have been part of the Moon Platoon have known for a while. He has very tight control. He's in charge. He collects most of the money and he goes after people with ferocity if they leave him. He thinks they'll take any secrets from his organization. There was more in my discussions with Edward Thorpe than they would like to share, but they were specifically entrusted to keep particular things he said solely between him and Thorpe. He's choosing to do the right thing and honor his request. So, I'd like to go back to recording number 2. We have corroborating evidence from Thorpe that Citadel was producing and returns that were visually correlated with the stock market, and Citadel agreed with Thorpe's statistical analysis when he presented it to them. So, for example, market makes 3%, Citadel makes positive returns correlated with 3%. So, sound easy enough? Then why do we have MSM articles like this that say Citadel's securities opens up after a record $7 billion windfall? Ken Griffin's hedge fund gained 7.5% April while markets tanked. Citadel security doubles net income as trading market share rises. So this now seems inconsistent. Citadel should have lost 2.15% from January 1st to July 1st, 2020. Even taking into account any fees being collected, there's no way Citadel could have been able to double its profits during the first half of 2020. It's impossible. So if we go by Thorpe's statistical analysis, it's clear that Citadel is artificially inflating their positions. It could be for a variety of reasons. It's good to prospective clients, outside competitors, take out loans, gain leverage, etc. This is what happened, does it sound familiar? To Bill Wong, owner of the hedge fund Archegos, and now he's been caught. So this isn't new. We now have a new case that Archegos wasn't the only one artificially inflating their portfolio, and that Citadel has been likely doing something similar. Considering that Huang was indicted and virtually faces a life sentence in prison, it wouldn't be a stretch to suggest that Ken Griffin could also face a life sentence in prison as well for artificially inflating his portfolio. So if they were to be indicted by DOJ as well, every count for racketeering conspiracy carries a maximum potential sentence of 20 years. A couple of counts of charge the racketeering conspiracy, and your human mortal life is full. Citadel is under DOJ probe, so hopefully DOJ is taking a closer look at these inconsistencies. We reported in this DOJ probe a while ago. Final note, do not harass Edward Thorpe. Do not harass him. Don't do it. Thanks again to the person who interviewed him, as well as the DD from the first part of the video. We have Ein Fachman on Reddit. So thanks so much, and thank you, Professor Meatball, for sitting so patiently. See, he's ready for the treat. If you guys want to see me give Meatball the treat, I will, because you guys stayed all the way until the end. But first, I get to flip this coin and say once again, if you guys haven't watched that video right now, whether or not it gets deleted, please do, because it is an opportunity for a one-shot get my six-figure portfolio. So if you guys miss your shot this week, that's your one shot, and I'm not gonna be able to honor it next week. So here it is. I'm going to tell you which one's heads. Heads is the lady that says liberty, and we keep. Tails, and we don't. Ready? 3, 2. That's a heads, baby. That's a heads, baby, right there. Liberty and justice for all. So I will keep that video, but thank you guys so much for making that video possible by watching until the end, doing what it says, because there's a secret code inside that I want to make sure all of you know about. Thanks to those of you who make this show possible, and especially the longer ones here. I want to continue making them for you guys, and you guys have been noticing that we've been uploading basically every single day of the week. So if you guys like that, please do like the video. If you guys want to subscribe, please do, and hit that bell button while you are there. Check out the second channel. I've been mentioning it to a lot of you guys, but that's where I'll be posting more updates about the musical and about composing and music things in general. But for now, and not for forever, I'll see you guys in the money. Peace.